What it do, baby?
Welcome. How we doing? Gosh, miss, what's up? This here, ZS really isn't the worst thing I've ever seen Marvin talk about. $92 though. Tough. Viral, how we doing? Ooh, yeah. Ubo. I didn't even know that thing still existed. Cheesecake Factory, sick one. That's a hilarious one to trade. Bought that dip yesterday for the gap up today. Nice. That's a sick one. Fubo was bought by Disney. I mean, I just gotta say, it's not necessarily like so much my mind that needs to be changed as much as I think the market's mind needs to be changed on this thing. It's, it's down a bit from highs, I'd say. I figured you were kidding. That was the only reason I was joking with you. Oh, it only down 93%. Sick. Honestly, though, like a pretty like nice little setup. If this thing wants to push, I mean, you can catch a buck run on these things, dude. Those contracts are so cheap, they'll pay so gigantic. Nice. Well, they must have wanted it for some reason. Welcome, everybody. We'll give this a few more minutes. I got the link posted a little late. This one's bumming me out. This is a trade I've been looking for an entry on. I just haven't been pulling the trigger on it, and I really should have been pulling the trigger on it. And then finally they put in that real nice earnings today, pushing 123. Opening up here. This is a sweet company though. I like them. Gosh, my snows. Great. AES sells more. God, if they could give me that test down here again, I'd be so happy.
Yeah.
Those shares are not a heater for you though. Whatever you're in there at, they 30% or something, that's so sick on shares in a month, few weeks.
I think it was like 42 at one point.
There
Can't
you go.
complain.
Yeah, I couldn't remember if you got this entry, the first one down here at that 950 with me. I thought you did though.
I think I was a little late, but somewhere around there. Yeah, I
Yeah,
want
and
to say
I mean, I
9,
don't remember where I
7.
was. Yeah, I don't remember where I was, somewhere in this zone. Okay, let me make one more post and we'll get to rolling. Yeah, we're gonna have like nothing for attendance tonight. Aaron, how we doing? It's probably good, but those things are, let's keep gotta be looking at. Dude, that would have been a sick short though. It's always one of my favorites. Okay, so welcome everybody. Dirty River here tonight. We're gonna be just having a little Q&A. Like I said, I don't expect attendance to be huge. This isn't a normal night for lectures or anything like that. I just oftentimes like to get on for a little discussion anytime we have some big volatility in the market, big moves in the market, you know, whether it's earnings or FOMC. I mean, not a real nice move, nice sell, oops. Real nice sell on FOMC today. Obviously not, you know, not one of the giants we've seen in the past, but I mean, a 6, $7 sell is big on SPY, you know. And then instantly bought up into the closed, bought, you know, big earnings out of a couple of the companies. You know, it's normally a pretty good time to have a discussion. I don't really have anything that I personally want to talk about tonight. We can, of course, talk some FOMC stuff. We can talk trades that you guys have taken that worked or didn't work, ideas that you have, or just places that you've been struggling. You know, one of the big things that I've seen lately is there's been you know, and I guess we'll just start. So again, welcome everybody. Something that I've been noticing a lot lately is, you know, there's no denying when you zoom out and you look at the market, it's on a nice run. Just the other day though, I was pointing out to God, I wonder if I still have it. I was pointing out to a buddy of mine. Oh yeah, so here it is. I was pointing out to a buddy of mine that, you know, yes, the market is vertical, has been vertical. We do need to remember that, you know, yeah, we're up on the year now, you know, we're officially up on the year, and, you know, nice and up, but we haven't done a ton of movement to the upside. And if you really start breaking down these charts, and this is what I said to him, you know, he was like, the market never consolidates, blah, blah, blah. And so I put this chart together for him. And I said, you know, look, here's what the market did. This is 16 days of chop that breaks out and goes into another 2 weeks of chop. When we finally get the breakout, a lot of people know I like to trade a measured move. It's not there's a bunch of ways to do them, but basically, when you're looking for a measured move, when you have these long periods of consolidation, measure it. You know, you're looking at, you know, whatever it is, $14 or something like that. You know, and nice consolidation. Well, you can kind of, when the breakout comes, start to look for about $14 up. So, you know, that gets you to up about right here. So nice measured move, and then 10 more days of chop. And then ultimately we had our, you know, our next measured move from our chop right here, $8 or whatever, and we popped $10, you know, so we got a little bit above it. That's how I like to analyze the market. So the issue that I have been seeing with people, and you know, a lot of people aren't going to ever zoom out and look at the market big picture and actually say, you know, what is it doing? There's no denying rip of a lifetime. Also dump of a lifetime if you like to be short. You know, we got both so far this year. Rip of a lifetime, but pretty, you know, once this mayhem down here, you know, that April, you know, end of March into, you know, very beginning of May, once this mayhem stopped, the market quit being as wild, you know, when you just look at this is just a nice consolidations, breakout, consolidation, breakout, consolidation, breakout. This is just your average bull market. People keep talking about, you know, this market's parabolic and blah, blah, blah. And I mean, it is, but we got big companies, big value companies. They move the values of these things. And the more they worth, the easier it is to move big dollar amounts. You know, when $1 billion of your market cap isn't very much and it is shifting all around in the market all day, you can start to get some moves. So what I was trying to explain to my buddy and the issues that I keep seeing people do is we need to be realistic and understand, okay, you know, is there plenty of reason to sell? Do we have debt issues? Do we have inflation issues? Do we have all kinds of issues? Absolutely. Doesn't matter. If the market wants to buy, the market is going to continue to buy. And as we've been seeing from company after company for the last 2 quarters, they're putting up good numbers. You know, money is still being spent, money is still being made. And so we just have to look at this as an average bull market, you know? So we want to be dip buyers. The issue that I've been seeing is the chasing. Every day, people are trying to buy calls at highs, or even on our little sell days, you know, puts at lows. They never take the big picture in. And so, something that I always try to teach people, I do a bunch of one-on-ones. Obviously, I do, you know, I've done probably hundreds of classes in OOT at this point. Something that I always try to teach people is you really need to be waiting to buy dips. You know, maybe it's 3 or 4 5-minute candles. Maybe it's a couple daily candles to give you that dip that you actually want to buy. Something that I see, one of the number one issues that I see with people is, and we all joke about it, we all talk about it all the time, but it's serious. Buying calls at resistance and buying puts at support. It just doesn't work. Chasing big picture does not work. And so a lot of people say, well, how do I know I'm chasing? Or they try to say, oh, I trade momentum. 9 times out of 10, when somebody tells me they trade momentum, I just laugh because what they mean to say is they see green candles and they can't resist clicking buy. They aren't actually trading momentum. They just see, oh, this one's running, so I'm going to buy calls. Or this one's dumping, so I'm going to buy puts. Well, how I tell people the easiest way to identify if you look at your trading is ask yourself how your trades perform. And so I'm obviously not saying that, we're trading options here. For the most part, I know some people trade shares, but if you buy an option and every single time you enter a trade, you're seeing minus 30%, minus 20%. Fear and Greed Index, sorry, Viral, I just read your thing because it popped up. Fear and Greed Index has never at any point in my trading meant absolutely anything to me in regards to how I'm going to trade the market. I'll laugh at it. It's funny when we saw it at like 4 or whatever it was. But yeah, I don't care. It's like RSI. I mean, the amount of times I've made money and overbought RSI conditions being long is ridiculous. Same as being short and oversold RSI, those types of things, they don't work for me. Okay, but so you enter a trade and it goes minus 20%, minus 30%, and that always, always, always happens to you, um, that is an entry issue. And that is why I always teach the most important part of any trade is the entry. My what I always say is a good entry can turn a good trade into an absolutely great, amazing trade, and it can keep a bad trade not too bad. Entries are really what controls your overall risk reward ratios in those trades. And so that's what I'm seeing. Yes, we're in a bull market. Yes, the market's been putting in great consolidations that then ultimately give us breakouts and continued movement to the upside. And so we do want to remain in dip buy mode. Is there plenty of reasons to, like want to be short? Sure. Doesn't matter, and don't get me wrong, you can scalp short, I mean, that's fine, like scalping short, quick trade short, no big deal. This is what I'm talking about. I'm talking about big picture in the market. We want to be in dip buy mode. I've pretty well been preaching since basically the end of April. Be at the very least cautiously long. Did I expect this? Absolutely not. But we had to start looking up, And so that's what we've done. So if you are, you know, looking to be a dip buyer, that means you will never buy at resistance. I get that people think buying at resistance means they're buying before a breakout. We aren't going to get too much into statistics tonight, but statistically speaking, most breakouts fail. Something might try to break out a whole bunch of times, but only one time does it actually work. And so breakout trading is an inherently difficult thing to do because most of the time it's just people either chasing or cause a resistance situation. When it works, it's awesome. I've been there. There's times and places that I will do it as well. There's times and places I'll short the lows because something's going on that it makes sense to short the lows. Generally speaking, you should never, ever, ever be doing that. You always want to be buying on pullbacks. That's when big money buys. That's when algos buy. If something is dipping, they're going to be buying on the way down, looking for another leg in the market up. They are not going to be buying at those highs. They quit the buying there. And that is what causes the pullbacks to begin because sellers start overpowering the buyers and the price goes down. As price goes down, that is where algos will start to say, big money people, whatever, will start to say, oh, this is looking more and more interesting. This is looking more and more interesting. We can get bounces from here and make more money with less risk. So that's why you don't want to be the person buying calls at resistance. The second half of this, and after this, we're just going to open it up to you guys. The second half of this is stop placement. Um, it's really, really difficult for people to think about stop placement. We aren't talking about scalps here, I mean, we can, but I'm talking your day trades, your swing trades, uh, yeah, there you go, viral. I'm on your same team. I wasn't gonna beat it too hard, but yeah, that the trade ranges and make way more money way more easily is my favorite thing in the world. And then if the breakout comes, you got best possible entry. Okay, so second part of this is uh stop placement. And we're discussing swings, we're discussing, longer, day trades that have potentials to be swings, those kinds of things. And where do we want to place our stops? So actually, because Viral's talking, I'm going to use one that him and I discussed. So Pepsi, him and I were talking it back here. This is a beautiful range to trade. You know where you don't want to be long. I mean, look at how many tests up here. You know where you do not want to be a buyer on this chart. You also know where you do not want to be a seller on this chart. And why do I say that? They keep bouncing it down here and they keep rejecting it down here. So this is a really, really beautiful example of, and I'm going to keep using Bio as the example. So he had a long swing on Pepsi. I don't remember where he entered, somewhere, I don't know, somewhere back here. That doesn't really matter. He entered somewhere back here. He then identifies, okay, we're trading in a range. We push up to this 132 area or whatever it is, your 132, 133 area. I'm going to scalp short. It doesn't even matter, like who cares if I'm in the long trade? I'm trading short. Well, when we come down here, he's saying to himself, I'm going to buy. I will be scalping the upside when we get down here, ignoring his long-term position. Over time, do this a few times, and this is I mean, this is like the most textbook, easy to trade, easy to make money range that there is. So it is kind of a cheating example. But he doesn't care about his long-term trade. Bullish thesis is still intact. His stops are down here, 128, whatever it is. And I'm using my numbers. His numbers could be a little different, but his stops down here, 128. You get some breaks and closes under here, you're out of the trade. No big deal. Perfect range to trade. Now, this leads into the second part of this, of why you don't want to be the buyer up here, because because when you're up here, you can get trapped. You're trying to buy the breakout, you think the breakout's coming, you get smoked. So if you buy up here, your stop realistically needs to get closed down below 128 because that is the actual breakdown. This is where the real breakdown comes. So if you're buying up here, your stop is $5, 6, $7 below you. And maybe I don't know what you're targeting from this 132, maybe this 135. So you you're going to be risking you're going to be risking $5, it looks like, to make $3. That is terrible risk reward. Well, when you move down here, you buy down here, you buy pullbacks, even, bull market, whatever it is, you buy the pullbacks. When you enter here, say you're buying 129s, your stop is under 128. Any strong daily close under 128, you're out. You got $1 of risk. Well, very best case scenario, you're looking for 135. I mean, and ultimately you can see you could have been looking for a lot more, but you're looking for 135. These previous highs where the breakdown came. So we buy down here. When we do that, our original trade, the breakout chasers up here, buying at your 132s, risking $5, you buy your 129, you're risking $1 and you're potentially going to gain 7. So this is excellent risk reward. This is why you don't buy highs. It is also why when you look at a chart like this, if you're in it for the long haul and you took the bad entry at the highs, you know where your stop loss is. You do not adjust that stop loss. You don't do anything to that stop loss. You know where it is. And so as long as that trade is intact, you can still stick with it, but you just have really horrible risk reward. Now, the final part of why this is super important to me, the best part about trading ranges, they give you the best possible entry and you get to trim to the breakout chasers. So when the breakout comes, you can be trimming your contracts, saying, hey, maybe some of these pull back. Oftentimes breakouts fail, we know, so I'm going to trim a couple of contracts. You are straight up selling them to the chasers. So then when they start making money, you're making twice as much money as them. That is why in the most perfect chart, very rarely going to work this beautiful, even such a perfect triple bottom on the daily, very rarely going to work this beautiful, but that is why we are dip buyers and we're short rippers if we're in a range. Doesn't even matter. Let's see. Well, yeah, so Aaron, there was a range being set, then earnings made it happen. Now we got another range being set that we had this little trend, attempted the breakout, again, failing it now, but we can identify this one super, super easily. Here's our range, So we're dip buyers all the way down to 140. Doesn't even matter to us. We don't care. We want to be dip buyers down in this zone, looking for maybe 146. We know we have this gap right below us. So if we do start selling, obviously we very likely want to stop out of that trade and maybe trade the gap fill or at least back down to that 138, But yep, ranging. I mean, that's what, this definitely falls in the slower mover category. That's what these things love to do. Yep, respect the stop loss. You know this. ZS. Oh, Norvin, we were looking at that before you got here. I was even saying this isn't the worst thing Norvin's ever brought up. We know where the breakout line is, though. 292 is where our breakout line is. So if anything, we want to be looking for longs down in this 280. You're definitely chasing. I don't hate this daily candle for a continued push to the upside, but I mean, even in sticking with, just looking at ranges that are forming, I mean, this is basically your range. So as you're getting up here to the highs, we aren't buyers up here. We aren't necessarily short, but we aren't buyers up here.
Yeah, I was looking at that ZS and UPST.
Yeah, are you even looking at it? I'm talking about it right now.
Yeah, I'm looking at ZS. I literally posted a chart.
Yeah. Yeah. Are you looking at my screen or are you just looking at your screen and posting a chart?
I'm looking at yours, bro. So once it breaks that box, it's pretty much a box, right? Right there.
Yeah, it's just a box of the high and the low. That's it. And you could even bump this up a little bit, if you wanted, bump this down to really like have that double top right there. But for now, you just want to view this as the highs. But I do have to point out, and this isn't major enough that I'd put it on here, you still have some things in the way. You break this 295, you got some big things overhead. Not only through psychological, you also got the 298.90. You want to be buying it down here at 280. So you got more wiggle room is ideally.
Yeah, that's why I was looking at this setup because obviously it's a really strong name. It's just, it took some steam off the rally, but yeah, I think it's ready to rip higher. Obviously it's a cybersecurity company and
well, they're giving you a range. So if and when I would expect them to.
Yo, River, what about that golden entry on Meta, that 700? Ooh, that was nasty, River.
Yeah, I know I'm regretting it. I told a friend to get some Meta for mid-August. She did it.
River, we literally found it first, bro.
Yeah. Well, I mean, you had to be the dip buyer on Meta. I've been talking about that in like all my classes. I mean, you have to buy down here. I think that's what we said. I think we even talked 691 last week. So when looking, Ray, great question. When looking at the daily chart to determine an entry. So here's the deal. You're going to look at the daily chart and you're going to, okay, let's just use Meta. No, we shouldn't even use Meta because it's just FOMOing, but whatever. We're going to look at Meta. There's like, let's see, pretty like obvious places where you likely want to be a buyer on Meta. And really I mean, I did these quick. It's kind of some of these highs right here. So there's very few places where, where you want to be the buyer, I like for sure on Meta. So here's about our little zone where we want to be that dip buy on Meta. Obviously, we're going to ignore the fact that earnings is at like miles away from here, but we know where we want to be looking to buy that dip to get into a potential swing trade. A couple factors really come into play. How big of a move are you looking for? If you're just looking for a quick little technical bounce, are you looking for a reversal? All those things, come into play. If you're looking for quick turn, you've sold into strong support, you've pushed into strong resistance, maybe it's a day trade, maybe you'll swing it for a couple days as long as trade's intact. You really only need a couple of weeks. Of course, you need to be realistic in your strike price. On something like Meta, if you're trying to catch this technical bounce, we're pretending that Meta didn't have earnings. You're trying to catch this technical bounce for a move back to 700 because like it's probably going to retest it after a breakdown of it, So you're looking for that move back to 700. You assume it's going to come in the next couple days. You need to be realistic. You don't want to go swinging a 760. You want to swing a reasonable strike price. And if you can't afford it, the trade's not for you. If you're looking for a bit more of a reversal, you want, the nice turnaround, or I mean, that Pepsi one, you want to catch the breakout, you know where your stop is. You can buy time on these. They're cheap. You can trade a reasonable strike, all of that. You have to ask yourself, if you're buying this dip down here at 129, the high, your final target is 135. You don't go outside of 135. Closer the better, in my opinion. And you buy the time that it could take. Something like Pepsi that can consolidate for a long time, you're probably going to be wanting to buy 2-3 month out contracts.
Yo, River, I have a question over that Pepsi. I'm looking at a similar setup. Obviously, it hasn't broke out like Pepsi, but CoreWave has literally been getting shorted heavily. That I think the flow. I'm not even so sure, but
As
like,
it should. This thing got so far ahead of itself. It is
you think
ridiculous.
that 90 is that dip, or where's
It had,
that well buyer? Like, how do I
look at,
know?
here's where I told Norvin. Norvin brought it up, and I told him to buy here at 41 before it ran to 187. But yeah, this thing had no business being up there. It's got to prove itself. It has to prove itself. This earnings day is going to be a big one for it, in my opinion. Whatever that is, August 12th, we'll see a move on it. No doubt. I mean, we'll see a move on it from there because it'll get to prove what it's doing. It's an IPO that ripped
Yeah.
what, 500% in the first 2 months it's traded.
That's my question here is kind of like, how do you find a base? Like, for example, okay, like it's found this price or whatever.
You don't. You let the market find a base. We can see people tried to buy, previous breakout point. People tried to buy, it didn't work. Breakout kept coming. I mean, really, your next stop,
like 90, right?
96.85 to 100 in that range is where you can try, but I wouldn't. This is
River,
like
just tell me right now, River, that 90, bro, like just long it.
No, I mean, I don't even see, no, I mean, for me, 90 is not necessarily a buy. 100, you can try that psychological number, but look at this thing was just parabolic. We had no sort of consolidation or pullback right there. Boom, ripped through it. We crushed that 96. I'll catch you at 65, 70.
Yeah, I'm just trying to bottom fish, but I just don't want to be like, oh yeah, I'm bottom fishing, but it drops another $10, because
Yeah, I wouldn't, I'm not a
it's
buyer
been
on it.
going down a lot, but I just
I'm
like
not a buyer.
just in the
Okay,
AI.
Norvin, we're moving on. Mario, adding Apple longs, like you said, earnings tomorrow. I wouldn't. It depends. Do you want to like lose money? Just play earnings, and that's like,
We're playing Apple earnings.
oh my God, this guy. And so no, I can't recommend adding Apple longs tomorrow. Am I bullish on Apple and Apple earnings? Absolutely, no questions asked. I do think that yet again they got this sell to me. No rip with the market. This to me is all backed on that India tariff, and I think that India tariff is an indirect jab at Apple because, I thought everybody on the planet knew that, Apple, when they say they want to get out of China, they want to go to India. I thought everybody knew that. Apparently, the administration missed that memo. So when it became clear that was what they wanted to do, it became hard for them to get the turnaround. So you see India tariff where Apple wants to go, and I think we're seeing that reaction there. Obviously, to me, it's easy to be bullish on Apple. If, back here 195, 200 range. I was begging people to long Apple. To me, that was the spot to be long. Obviously, got the really nice move up, but that was definitely the spot to be long. But as far as earnings, I mean, it's not. I wouldn't be loading into that one or nothing. Yeah, crash back down to 60s. I'm assuming you're talking about CoreWeave. Yeah, I wouldn't be surprised. Yeah, you got to be patient to bottom fish, Narvin. Like I mean, even meta, you're like, oh, bottom fishing. Not really. I mean, it was a nice pullback, but like this is not bottom fishing. Like you want to
I
see
caught
bottom
shark right
fishing.
there, bro.
Bottom fishing was me and Crash Miss hitting AES at 950 off of those 20 highs. You know, that's bottom fishing to me. Like a little $30 pullback on meta, who cares? That thing does that in like a day if it wants, you know. Sell Apple, buy Nvidia. I don't know. I wouldn't. I mean, I'm not chasing Nvidia up here. I obviously don't think it's like coming down. I don't know. I mean, Apple has much easier upside than Nvidia does from here.
Yo, River, what's going on with TSM?
I don't know. Didn't they have earnings?
300 end of year?
Who knows? God took the heater just like everything else after class. Who knows? At this point, yeah, I mean, you can stop some
Or Broadcom?
uh ooh, tricky. Look at this. It was working nice so far. Look at that 248 and long term started looking for that 262. I like Marvell. This is the one I've been telling people to buy on the way up here. I like Marvell. Nice gap. Nice gap fill. Let's get above that gap and keep on going.
Yeah, I saw that. It was like $8 up pre-market. What happened to you?
CRM, yeah, what happened with that one? Oh, I remember this. We said short under that trend, huh? Or short that trend. It looks like yeah, we got blown out for a second, but nice one there.
Yo, River, what happened to MU, bro?
I don't know, I haven't looked at it. Yeah, it's still up. Yeah, there you go, viral sick one. RGTI, yeah. So like I got a point like this is and I'm sorry that you guys stopped out today. Obviously the rip after close couldn't have been predicted, you know, but so I only got 2 levels on my chart. Okay, so full port RGTI, that's from this blue circle back here. That's from Norvin. That's when he told us to full port RGTI before it dropped from 17 down to $6. So that's one of my levels. Only other level I have on here that I care about is 14. I mean, it's huge. You know, we can see that 14 matters to the market. Hate to say it, not the spot to stop out today. I mean, it was like, you know, this is one of those prime examples, and definitely like you shouldn't be chasing these nonsense names, you know. I mean, I know this company's obviously it's still up massive from the beginning of the year, blah blah blah. But this 14 was, as much as I hate to say it, the spot to get long. You know, your risk reward was much better here. Maybe you crack below 14, you get below this 13.75, you gotta stop. 25 cents below you, piece of cake, because that gap feels likely filling if we get down there. Piece of cake, easy little stop right there. Looking for that move back to these highs, you know. So that was an unfortunate one. I only got 2 levels on the chart, but this is a prime example of why we're dip buyers and we're not rip chasers. Yeah, let's talk fibs in just 1 second.
Yeah, I think that's when I stopped buying ribs.
Yeah, UNH. So this is one. I mean, I was wrong. You know, I love to admit when I'm wrong. I thought this was going to be a super easy beat on earnings. They gave them like much higher expectations than I would have expected analysts to be giving them at this time, and so they missed. You know, I think though, as I've been preaching, really, I mean. You should be a buyer of this. You should be ready to see some red on it. But we've cleaned up some of these lows now, you know. I still think cautious buyer on UNH with a lot of time is a no-brainer move. But we'll see. So fibs, they use fancy math, okay? And I've been trading them. So I have, you can see I have a few different on here. We'll do a new one. So there's so there's more than 2 kinds of fibs, but for the most part, people use 2 different types of fibs. Exactly, viral. Dan, how we doing? So people mostly use 2 kinds of fibs: retracements and extensions. So a retracement, you know, you get a big move down, okay? This is your retraces back up, you know, 100% retrace means 100% of the move has been, you know, reclaimed. So this is a big one people use. Obviously, these are what I was making personally heavy use of these on the way back up, just because, you know, it was the heaviest selling I've experienced, you know, while actively trading in the market. I've never seen the market hating decisions as much as it hated all of those decisions from February till April, you know. The next common one that people use is going to be fib extensions. So you might have seen that I had them, or you know, I had those on there. The difference between a fib extension, the difference between a fib extension and a fib retrace, an extension is going to give you levels into places you haven't traded. So all-time highs, for example. The other, so I have actually been using kind of two sets of these lately. So when you do a fib retrace, you go from your highs to lows, whatever. I should have drug it over to the other side. You go from your highs to lows, and then you get to, you know, on a fib, on a fib extension, you go from your lows to highs. On a fib retrace, you only get 2 points. On a fib extension, you get 3 points. So for me, on our incentive fund charts again, for me, when I do my extensions, I like to use, so if we already have this fib, I like to use the 50% retrace for what is known as your midpoint or your starting point. So the 0% extension is going to line up with the 50% fib. The 100% or the 100% retrace is going to line up with the 50% fib. So this gives you just some of those major levels to trade up into. Then I also did one because as you guys saw my consolidation charts, you know, this was like the consolidation I was watching. So over the last week, or here, you know, sometime, I don't know, a few days ago, I actually did just a minor set of extensions because this was the breakout, you know, this was the breakout level. This was their little measured move. So I was just using those to trade them intraday, and they're nothing more than just some glorified support and resistance levels. So, you know, they work pretty nice, you know, they're all statistical. Algos love statistics. So you can just kind of run those things and they'll work real nice for you, you know, over and over again. Do I use them all the time? Absolutely not. I've never been, I'm not an intraday fib user, because they don't take market context into consideration. So I think they're a wonderful tool on long time frames. I think they're virtually useless on shorter time frames. I can't say that. We've all run some fibs from high a day to low a day, you know, an hour and a half into the day and played some of those bounces and rejections. It does work, but I would rather just trade, you know, your typical support, resistance, trends, price action. That's always what I do. Yeah, and I love the opening range. I use it all the time. I mean, you know, it's on my charts every single day. So I do use it a lot, no denying it. Uh, Gives you some great statistics to trading on. Okay, but so with that, I've yapped a bunch. I've asked a few questions. We got any other questions? Any trades you guys have taken? Any concerns you have? Maybe you did or did not understand. You know, something that I talked about. Maybe you got questions about FOMC. Let's hear it. What do you got? You know, a nice smaller crowd in here tonight. So we got 20 minutes left. I can always keep yapping if you want, but I'd love to answer some more questions. Wells Fargo, huh? Yeah, you've been getting, I knew those things were getting smoked. Remember I kept telling you to quit chasing those financials longs, Marvin? Like, and I was like, oh, quit buying the double tops. And you're like, oh, I think they got another leg. And I was like, oh, I think they're going to pull back. They pulled back. Yeah, quit chasing those things. Let some deeper pullbacks happen, then you buy. Oh, well, today was probably the entry. Look at that. Filled your little gap down to 81. Yeah, VWAP. Yeah, we can do that in 1 second. We'll check out PayPal really quick. Sorry. Okay, so PayPal, obviously, this is like the move up that everybody's just been wanting to catch. It's obviously still not happening for him. But let's just clear it out. So PayPal, obviously, big consolidator. Like I said, everybody's wanted to catch this move for a long time. I don't know why. It's like a Twitter favorite, you know, people send me the Twitter charts on PayPal all the time. Let's see. Yeah, that's a pretty big one. I mean, this thing's just, it's looking bad. I'd probably be looking at this trend as well. Definitely broke under that. Something like that. Definitely broke under that. Kind of a little line of defense right here. Yeah, smoked it on earnings. I don't know how their earnings were. I take it not amazing. Yeah, pretty decent miss there. I mean, I have to read the real earnings report. Uh, you know, my rule of thumb on any of these names, man, if you know more about PayPal than me or anything, which yeah, I'm gonna be honest, you probably do. Maybe it wasn't a bad report and they crushed it on a not that bad of a report. Looks like a decent miss to me. Let it work for a couple of few days before you start buying anything. Because I mean, this to me does not look like a constructive chart to the upside. Definitely looks like it's going to want to see a little more downside. First real spot of interest on the buy for me personally would be somewhere down here at the 66 bucks, something like that. That's really where I would feel most comfortable to be in there. Definitely an ugly chart, definitely weak. Has not been able to hold bounces. You know, I mean, it's grinding higher gradually, but is obviously not liking these bounces. I'd have to read the earnings report, but nothing on the chart. I mean, if you want the risky one off of 69, my buddy loves those ones. If you want the risky one off 69, you try it, but cut that thing quick and wait for 66. I won't be surprised to have that thing come into play. Yeah, PayPal got smoked. So VWAP, we're gonna talk VWAP real quick and then we'll get to the other one just so I don't get away from it. So let's see. Give me 1 second, I'll get it pulled up. So when I use VWAP, and this is just personal preference, it's gonna have an upper and a lower band. They're deviations from the VWAP. If I want to trade deviations, I personally don't use those. So VWAP, it's gonna be this pink line on my chart right here, volume weighted average price. So what it is telling us is based on volume, so you know how shares traded, what's the average price? It's the same, like time frame doesn't affect it. If you get to the daily, it does change it very, very slightly by like cents, but time frame doesn't affect it. It's all based on volume. I think it is one of the most crucial lines on your chart. If it's just sideways, market's chopping. When you start to get trending in directions, market is going up or down. And we know if we are above it, then as a whole, long people, bulls, making more money. Based on volume, the price is above the average price paid on the day. If it's below it, the price is below the average price paid on the day. So it means bulls underwater, bears making money. So I use it all the time. It is also a it's an indicator that everybody watches, from beginner day traders to big people on Wall Street, a lot of the big imbalance traders, and not like nonsense RSI divergence stuff like that, like real imbalances, arbitrage stuff in the market, those kinds of things. They Everybody pays attention to VWAP. Things like you guys have heard me talk about trading the market on close and balance. Those will start to very often pull you to VWAP because they want to be, you know, to when they're filling all of those market orders at end of day, then they really want to be selling them around the average price. The market makers do, the big money people do, and the traders do, because it means they're either losing less money or making a little bit more money. So very, very important line on all charts, can oftentimes be turning points throughout the day of, you know, you get the break and hold above, sometimes you can push, break and holds below, oftentimes you can sell. Like I said, when it's going just straight sideways, you know, you're likely ranging. So very, very powerful tool. Apple, yeah, I mean, yeah, but you just are curious because of earnings, I'm sure. So like the analysis doesn't matter. I remain bullish on Apple. Nice spot to try the dip buy was today. If earnings wasn't tomorrow, you try to buy it off that 208 zone. Very obviously, you know, the spot to try to be long. I'm overall bullish on Apple, but I think you don't touch it until Friday after earnings. You like PayPal long-term crash risk? Good to know. I don't know anything about it. I just know it's like a Twitter favorite. Why do you want to know the equivalent? I mean, you just kind of do them. I mean, you can just kind of look at it and say, you know, okay, SPY's 634. SPS is 630.62. So it's basically $2 difference or $20 difference, you know? I mean, it's you know, on SPY, it's a couple bucks higher. That's it. But doesn't there's no reason to know the difference, you know? I mean, like you can be trading like, you know, if you're trading SPX options or whatever, I mean, you want to be aware of price, but there's plenty of people that just trade SPX off of the SPY chart. But I don't think anybody should trade SPX. Real traders trade SPY.
Yo, River, what about Super Micro?
Oh, whoops, I don't know what happened there. Looks strong. I hope you weren't talking about PayPal. I shouldn't think it looks strong. PayPal earning as well too. It wasn't too bad. I don't know. Norvin, we'll come back to whatever your random thing is. SPY for tomorrow. Yeah, I mean, I don't know. Let's see. I kind of want to check the 4 hour instead to get some of this after hours action involved. Well, I mean, 640 is what everybody should be watching. You know, obviously, this is like the level to get by if we got to get by something, you know. But I'll tell you what, I'm not rushing in there long up here at this 639, 640 zone tomorrow myself. I would love to see some pullback to buy. We got PCE in the morning too. I think some other data. I think it's PCE. Ray, the outer bands, because they're deviations from VWAP, and this is, you know, this is getting more advanced and more deep in the market, but the market likes balance. The market likes average. The market likes middle of the road, you know? So those deviations, when you are, you know, 2 standard deviations from VWAP, they're going to get a reaction because the market is saying, okay, we are quite a bit out of balance and one side's really winning, you know? So a little bit of market stuff can happen to pull it back off of those things, you know? So it does work. I just think they're so ugly, I can't use them. And then for me, I prefer a B band. If I'm going to use a deviation, I like them off of the SMA a little bit more than off of the VWAP myself. Earnings were so-so. At least guidance was so-so. Makes sense. How much time do you normally want for a typical option? So it really depends. You know, if it's a scalp, it all depends on how long will your plan take to play out? Because if it's a scalp, you know, what I teach people is when I'm scalping, and you know, when we're scalping, we aren't looking for huge gains, 15, 20, 25%. That's what we're looking for. Book those all day long. You'll start making money, you know. If we're looking for a scalp, oftentimes the same day, if not a next day, you know, 1 DTE, when we're scalping, we want to be right or wrong instantly. That's one of the most crucial parts of scalping. And you know, heavy emphasis on the wrong. Like if you're wrong, admit you're wrong and exit. The last thing you want to do is get tied up in some out of the money option that's never going to work for you, you know. If we're looking for a day trade, oftentimes, if it's a day trade and I'm not planning on swinging and I want the move to happen today, you know, maybe there's technical things, you know, pullbacks to areas, trend breaks, whatever it is, I'm oftentimes going to go for a weekly contract, you know. If we start pushing into Wednesdays, Thursdays, I might jump to the next week's for a little bit more safety. But more often than not, Monday, Tuesday, Wednesday, I'm going to be sticking with the weeklies for any sort of a day trade. With a swing trade, again, it all comes down to time. Are you doing like me and Crash did on AES? Are you bottom fishing? Buy some time. Buy 6 weeks. Be ready to see some red if you need to see red. Are you getting a nice technical breakout with a retest and you think you're going to get a second leg up? You might only need 2, 3 weeks, you know, maybe a month, something like that. It all comes down to how quick do you expect the trade to work. I do want to emphasize I don't care if your contract has 4 weeks. When the technical breakdown comes, you stop out. It doesn't matter if you're 5% red or you're 30% red. When your planned stop out comes, you take the stop. That's the more important part. I don't care how much time you have. I'm not impressed by contracts that went minus 50, 60, 70% back to profit. Am I happy you made money? Of course, but I'm not impressed by that type of trading. Yeah, I mean, obviously, eventually, you guys know me. I stay pretty bullish. UPST. Wow, it had some nice volatility today. The little outside candles. Yeah, it's tricky. Dead center of the little range right now. I'd buy it at 80. That's it. Hims, who knows? ER time. Yeah, oh yeah, you said it. ER coming. Yeah. Not the spot to be long though. Jeez. Look at this thing. Maybe that breakout comes, but whew. I've maybe swung long on that one. Wait, is it like ripping in after hours? I'm already wrong. No. And not the place to be swinging long, that's for sure. Big old triple top on the daily. This is bullish on it. Easy company to stay bullish on without a doubt. Not the place to be getting long though, that's for sure. If you're already long, I guess you could stick with it, but Ray, so when I'm scalping it, nothing in my trading is ever based on percentage loss. It is all based on technicals. When the level breaks, we're out. We get the candle close under the level, we're out. No questions asked. That even happened to me yesterday. I'll show you an example. I think it was QQQ. Oh yeah. God, which one was it? I think so. And if somebody was in there trading with us, I think it was this one. I bought here. I whatever this 560, 760. I bought here, saw this trend forming, so I figured we had good support over here. Then we got news. This was my stop. Because I didn't want to ride it all the way to low of day. That was just, I mean, the VIX is so low that when these things get too far out of the money, it's hard to get them back making money. So I didn't want to ride it all the way down to low day. I took the stop. Basically bottom ticked the stop out of it, and those things ultimately turned around and ran for whatever 100%. Well, I didn't care. The candle closed below my stop zone. I take the stop out. I don't remember what the loss was. If I have my spreadsheet up, I could show you. I don't remember if I posted my spreadsheet yesterday. Nope. So you take the loss. It's never based on your profit and loss. It's based on what happens on the chart. That's like it's based on what happens on the chart. What becomes more important when scalping, as always, is your entry. If your risk isn't small, and this is what I like obviously you don't know it's going to go back to these highs, but my plan was buy somewhere around here, stops under here, 30 cents below us, looking for basically a buck move to the upside. So I viewed it as a one risk, 2-3 reward trade. Perfect for me. Tight enough stop. Unfortunately, I got stopped out on a news candle and got whacked. Intel, God, tough one. It's one that I think just can't get its footing. Let's check it out though. Well, that's tough. Earnings whacking. I mean, today off of 20, somewhere down off of this 20 zone. It's the spot to try. I mean, if you're already in there and you're already smoked and you got all that time, I'd add a couple at 20, but I would still also leave room. Intel just can't get its footing. I won't be surprised to see it back down to this 19 zone. And then that's another nice ad spot if you're staying bullish on it. We can see over the last, year or whatever it is, buying all those dips down there in that 18 zone have worked, or 18, 19 zone have worked. So stick with that until it doesn't work. I held in my first point years ago. What size and strategy would you be thinking? Tiny size, without a doubt, this like minimal one contract only sort of trading. And so viral, I can't really answer the financials on it. This thing just keeps getting worse, honestly. It's just losing money. They're gonna pump money to him again, I'm sure, but it's hard to know financially. Okay, so if I was like, okay, gun to my head, firstborn child on the line, I am probably trading, I mean, obviously support and resistance. So support and resistance, but the strategy is going to be double tops and double bottoms at daily levels. That's it. That's what I'm like, that's what I would trade. No questions asked. I wouldn't look for big, I wouldn't look for big trades. I wouldn't look for anything like that. If I really wanted to make some money, and trade safe and trade smart and be nice and calm, cool, collected, waiting for trades, I'm trading double tops and bottoms off at daily levels for scalps. ASTS. I mean, it's probably off that 51, right? I haven't even charted this thing. I'm just still so mad I didn't buy this breakout. Yeah, I mean, duh. Yeah, right here. Obviously, that's where you buy. Or even right there. Look at that little double bottom. Where was the alert on that one? All-time high is 72. Well, I don't remember. We've looked at a lot of things now, and now I'm running about 5 minutes behind. On Intel? I feel like it's probably higher than that, isn't it? Nope, it's 69, at least in the last 10 years. CLS 300. Oh, that one put in the heater of earnings, huh? Wow, look at that. What a run. Good for that thing. Yeah, I trade IWM a lot. Yeah, I trade IWM a lot. Crushed. Yeah, no rate cut. They hate that. I don't know why I didn't think of that. To just obviously short IWM because there's no rate cut. Whew, but it's at the buy zone. Yeah, I'm probably a buyer of IWM off that 220 tomorrow if we open around there. Yeah, Crash, that's exactly. I think that so we'll just go back to that Intel chart real quick. So realistically, if I'm looking at the Intel chart and if I'm looking at the Intel chart, I basically have like two spots that I care about. I'm like long down here and I'm short up here. I mean, I guess I could like make it a little bit of a range, probably something like this. I'm a dip buyer at 1845 to 1895, and I'll short this thing at 2557. This is what you need on Intel and just do nothing else, you know? I mean, IWM hates no rate cuts. So that's that's the issue with it. It doesn't, they need it. Like the small caps need it. The big money people just use it to be rich and make tax-free money. The small cap people need it to function. So that's why you get that really negative reaction, and then again, a bounce that doesn't stick on something like that. ASML. Isn't this a Northern stock? Oh man, I hate these things. I hate anything that trades this high in price these days. Man, I just remembered somebody else was asking me about something that was like clobbered. It's about what I care about. Come on right there. Kind of like those sneakers. Well, I mean, 200 SMA right there. Sort of make or break for it. Dividend day happened. I'd give it a couple days off of dividend day. If you could double bottom at this 700, that's right, be a buyer on it, probably. Akla, dude, I don't even know when to tell you to sell. I think just hold that thing. No reason to sell it. As much as I hate it. Actually, I mean, as much as I hate it. Can't lie. I mean, this is like about one of my favorite short setups in the market right here, though. Great low risk short up there. Earnings coming. Get a little dip into earnings to buy the dip at 70. I do like this short. I love the wedge top right there. Massive 3-push wedge. Yeah, Dan, absolutely. Now you're probably not gonna love my advice, but yeah, you got it. Norman, I don't know about it getting an insane buy and open, but I do know that if you hit IWM at 220, they open us around here, just have like a small stop on it. You're gonna be stoked. Yeah, IWM is like it is. It's kind of like a little double bottomy here. If it gets right down to here, now you start talking a nicer bottom. A little double bottomy, big sell, would have loved that 220 buy even just into the close. Everybody knows I was buying those dips into close that whole time. Would have liked that, but this 220 is what to watch. Right on, Aaron. Yeah, we'll catch you soon. GAN, like GAN the stock, or you mean like GAN? You mean like GAN fans, like the trader GAN? Is that what you're talking about? I mean, I'm personally never gonna teach you about GAN. Um, he's do you trade? Yeah, you trade those things? Yeah, yeah. I mean, I don't. I don't. I don't. I've read all about Gan because no, he was so like he was a Wyckoff time guy, you know. They were super into like time, you know, and like time, and they're what led to Elliott waves, you know. Which Elliott was good. Sir Elliott, he was knighted and everything, you know, but their stuff fell out of style as algos became more advanced, and then also their stuff fell out of style because he's talking about ABCDE. Those are the legs in these Gann and Elliott wave movements and the different kinds of waves. They kind of went out of style too because they are so up to personal representation, you know, and how you draw them and what you're viewing as, you know, your ABCDE legs, and you know, GAN waves. They they have too much personal preference on them that they're oftentimes wrong. Okay, well, if that's gonna do it, yeah, those IWM cons will be cheaper. SRPT, I don't know. Is this some up 1,000% that I don't care about? I mean, what about it? Looks like everybody hates it. Maybe
Think I
that.
should bottom fish this river?
What'd you say?
You think I should bottom fish this? It's really at the low.
No, it looks horrible. I mean, I guess it is trying to break the trend, but no, it looks horrible. I mean, stocks don't go from 146 to 10 without reason. It is interesting volume the last few days. They must have had like some news or like a Twitter pump and dumper on it or some biotech news, but you want nothing to do with this. I mean, biotech companies that look like this are oftentimes just a death wish, you know?
That's funny, bro.
Dude, biotech is like the most dangerous thing ever. Like, they're always, you know, they're always one FDA failure from bankruptcy.
Every time.
MicroStrategy, yeah, what's up on it? How's it been doing? Kind of spot to buy around that 400, 395, eh?
Yo, River, what do you think about
Norvin, can't hear you for some reason. Don't know what's going on there. Yep, most biotech just strike. Yeah, it's it's no good. Man, MicroStrategy, oh, strategy. No, I forgot strategy. Um, Honestly, kind of at the spot to give it a little risky try. Oh, never mind, earnings tomorrow. That's the only reason you care. Let earnings happen. See what happens. BMNR. So you've had to pull this one up too before. See those. Yeah, I'm good on that. QS, huh? Clobbered. Yeah. Somebody asked me about this on a while ago and when it was just flying, and I was like, all I said to him was, "Isn't that a shit stock?" And they're like, I guess I'll sell. I bet they're happy they sold. God, that was somebody in one of my lectures. Is the person that dude, they were in it this thing at like 4, and they were asking me about it at 10. Yeah, that looks bad. I don't know. There's a spot to buy though. See if it gets down there to 777. I mean, this is like you saw a little buyer show up today, but ticket earnings were beyond terrible.
Yo, River, you want to know a funny story about QS, bro?
No, not really.
The first day I joined only options trade, Anthony made 100 grand, bro. That stock went to 100, bro.
Oh yeah, I remember this. Wasn't this IPO times or something? I think this is, yeah, this is, you know,
I could do that too.
oh, nice little 2020 market top. I forgot about that. IPOs just running on nothing. 15 to 130 quick. Okay, well, that's gonna do it, everybody. Thank you so much. I love doing these Q&As. I appreciate y'all for being here, and we'll catch y'all tomorrow. Voice chatting away. Have a good night. We'll talk to you soon. Thank you.
Later, River. Take care, buddy.
Arvin, yep, thanks everybody. Thank you. Good night.